My mother was trained as a lawyer, and I've got this amazing photo of her being admitted to the bar. Single woman in the sea of men in black suits. I got asked on I was talking to Jamie Mackay's show a few months ago, and some caller texted in and said, "What's this woke nonsense? All these women running these banks." And I'm like, there are 25 odd banks in New Zealand, and 5 are run by women. I don't think we've got any problem yet. I think there's 4 working age Kiwis for every one retiree at the moment. There used to be 8, and we're going to 2, I think, in something like 2040 or 2050. I don't see the sustainability of the way we do it at the moment.
What do you see currently as kind of the biggest risks and or opportunities for Kiwis?
I think, some of the risk has come in uncertainty. Like, everyone thought that the economy would be on the improve this year.
Yeah, by now, yeah.
And then what happened was the uncertainty of tariffs and geopolitical and all that sort of thing.
My final question that I ask all my guests, what does wealth mean to you? Welcome to Fresh Moni. Just a quick note, this podcast is for education and entertainment purposes only. If you need financial advice, please make sure you contact a financial advisor to get professional advice. Or get in touch and we can point you in the right direction. The Fresh Moni podcast is proudly sponsored by the Booster Foundation. They're supporting Fresh Moni so we can keep having honest talanoa about money, building confidence and helping our people create stronger financial futures. Talofa lava, welcome to the Fresh Moni podcast. I'm Willie Leota, your host, as well as a mortgage advisor. And welcome to Fresh Moni, where we open up the conversation around money, which is typically taboo. But as well as money, we talk about investments, business and leadership as well. And today I'm super stoked to have the CEO of ANZ Bank, the largest bank in New Zealand, here on the show. Antonia Watson, welcome to the Fresh Moni podcast.
Thank you for having me.
It's I'm so stoked that I could have you here. You grew up here, and I've travelled here this morning to Tamaki Makaurau. What is it about your kind of early upbringing that kind of led you down the finance and banking kind of route?
It's a good question. I grew up in Auckland. I had a pretty comfortable sort of, I guess you'd call it a middle class upbringing. My parents had a small business, a pharmacy. And I actually had, my mother was trained as a lawyer, and I've got this amazing photo of her being admitted to the bar. This is in about 1963, I'd say. Yeah. Single woman in the sea of men in black suits, and she's wearing what looks like a cream suit in the black and white photo. So I sort of have that, parents running their own business, mum sort of beating being a bit of a trailblazer in her own way.
Interesting.
Always.
Because that is not, well, especially at that time, would not have been that common at all. No,
not at all. And I mean, I still remember someone like Rachel Paris being the first part-time partner in a law firm, and that wasn't that long ago. But the reason mum went into the business, into the pharmacy, was that once my youngest sister was at school, I'm the oldest of 3 girls, she sort of thought about going back to law, and she realised that the demands of the profession at that time, there's no way in the world she could do what she wanted in terms of the family as well as having the career in law. So she effectively, my dad was the trained pharmacist, he ran the dispensary, and mum ran the shop. So my early experiences of money were, my very first one was we used to get double our age in cents for pocket money. So when I was 6, that was 12 cents pocket money. Yeah, wow. And of that we had to save 7 cents, and 5 cents we were able to go and buy lollies at the shop. So we'd walk to the dairy and buy the lollies. But there was this expectation that that's what you could spend, and that's what you saved.
So that was set by your mum and dad?
That was my parents.
Wow.
Yeah.
Wow.
I still have this memory of taking my first money box into the bank, and it had $17.33 in it. So I opened the bank account with the contents of the money box. So there's sort of these little things over, I guess, the course of my early childhood that had the, money, need to save, expectation of saving, and then probably the next set of pocket money later on was I worked in the shop on Saturday mornings, and I got paid for that, and that was my pocket money. Yeah.
Wow. So you had early conversations around money. How important is that, in those formative years to establish great habits of money and spending, saving, do you think that is?
I think it's super important. I was lucky with my upbringing. I also think that my parents were very deliberate. So, for example, you know, when I was 10, 11, whatever it was, everyone wanted roller skates. Well, you know, they could have bought me a pair of roller skates. They certainly weren't. They certainly weren't as cheap as they are these days in terms of in terms of what you earned. But there was always a co-payment for the bike or the roller skate. It wasn't necessarily a lot of money, but it was you don't get stuff for nothing kind of attitude. So that's how I learnt about, I guess, a savings habit. Then you knew you had the savings, you knew you could do something with it, you knew you could spend it if you wanted to, you could put it in the bank if you wanted to. So, we went on our big family trip of our childhood was Disneyland when I was about 12.
Yeah, nice.
We had a set of chores and things we did around the house. We'd earn the money, and then depending on if we earned it, averagely, or we did something extra special, Mum and Dad would either double it or triple it.
Awesome.
So, 20 cents here, 20 cents there. It's a long time ago now, so it was small amounts of money. It sounds like small amounts of money, but we had our spending money in the States, and so it wasn't Mum and Dad, can you please buy us this stuff? We had to make our own decisions about what we wanted to spend our money on there, and this was exciting times. They had things that we'd never seen before. It was
Wow, that's amazing, because I'm in the situation at the moment where my kids are in their teens. They're kind of late teens, and they're wanting vehicles. And I am a bit of a softie at heart, and because I know about finances, I know about investing in properties and shares and all that kind of stuff. I have the knowledge to be able to give them that. But I love how your parents had the ability to give it to you. But they gave you knowledge of using your money and earning it. And they also provided incentive.
And they didn't give us, it's not that we never got anything. And, obviously, even the working in the shop, that came from their profits. Did they need me working there? I think they probably did, because it meant we can keep it as a family thing rather than them having to hire staff on the weekends. And that was the day that Saturday morning trading was a big new thing. We used to not be allowed to open on Saturday mornings.
Monday to Friday only. Wow. I love that, because it sets up, it just builds great habits for the future, doesn't it?
I think so. And the idea that you don't get something for nothing.
Because I think a lot of those habits are missed. And a lot of what I see in terms of the advising that I do, those early habits that you get taught, that or not taught, good or bad advice from your parents, are missed.
I think if you also, one of the other things these days is consumer goods are so cheap comparatively. If you compared the price of your bike to the average wage then and now, it seems very easy to provide all these material things. So I think, again, that's why just understanding the value of money is important.
Awesome. What are the kind of key principles and or values that your parents taught you? The
other thing I learnt from my mother, and this was quite young, was the miracle of compound interest. I don't know if you've talked about it on your show before.
World.
Yeah, exactly. And just how money creates money. So the more you save, and now, the great thing these days, and we've got something with our KiwiSaver at ANZ, a calculator that you can actually see it working in real life, because you can see, I've got this much now, but if I continue contributing, I'll have this much at 65, and that's a lot more than my contributions because of that miracle of compound interest. And you can tweak the amount that you put into the calculator, and you'll see that, gosh, even if I only put in $20 more a week, I'll get that much more at retirement. And you almost need to see that with your, in front of your eyes to really understand how money begets money, kind of. It turns into its own self-fulfilling, compounding effect.
Awesome. From those early years to now becoming the CEO of ANZ Bank, obviously there's been a long journey in between. Can you tell me a bit about your roles and what kind of, obviously you worked here, you studied in Otago, is that right?
Yep, yes I did. Proud Otago graduate.
Nice. KPMG. You started working there, and then you went overseas for a bit as well. Which one of those kind of workplaces kind of gave you, I suppose, I suppose it all would have been different, but what workplace gave you the most kind of experience to help you in the role that you're into today?
Probably ANZ gave me an experience to get to here because I started off as, I was hired to ANZ when I came back from overseas. We spent 14 years overseas. I was hired as financial controller.
Okay.
And I was hired as financial controller with kind of the, going into this role means that being the CFO could be potential one day because it was one of the sort of succession roles into the CFO role. And I became, I got a good grounding in for the first 3.5 years or so at ANZ GFC, learned a lot about retail banking.
2009, is that when you
I joined in
started,
2009. So I did
right in it.
Yeah, brave thing of leaving a pretty secure job at Morgan Stanley in the middle of, I left in, I think it was February 2009. Joined ANZ at a pretty difficult time because this was, deep in the GFC for the banking system. So I learnt a lot very quickly.
Wow.
And I also learnt, I'd worked for an investment bank for 13 years, mostly in finance and operational sort of back office COO style roles. And I learnt how much I didn't know about retail banking. So that was a real baptism of fire for those first few years.
What's so different?
So investment banking, we weren't as focused on the dollars and the budgeting and things like that. It was sort of every so often someone would decide the bank needed to save some money and they go, right, we've got to cut $1 billion from somewhere. Whereas ANZ, we're constantly thinking about margins. We're thinking about our costs. We're just making sure that we run a tight ship. Yes. And investment banking felt a little bit more boom and bust. It might have changed now, perhaps post GFC. But we try to keep a pretty tight lid on things. Just the importance of that. I hadn't had that wider picture that I got as financial controller of the importance of liquidity and capital and the problems that actually happened during the GFC and the things that we then set out to do to make sure that it would be very difficult for it to happen again. So from there, it was a natural succession into CFO, assuming I'd done a good job, which I presume they felt I had. But that was a more obvious transition. And to be honest, when I was CFO for about 4 years. I would have told you, if we were having this interview, I would have said to you, I think my next step would probably be the CFO of a listed company.
Okay.
So whilst ANZ Group is listed, and we have some great features of the bank here because we do have an independent board, we have to raise our own funding offshore, so you get a lot of the things that you get in a listed company, but not everything, and you don't have the imperative of share price and investors and equity investors all the time. So I sort of thought, that'll be a natural next step to take what I've learned at ANZ and bring it to a listed company. And then my boss suggested to me one day, he said, Antonia, I think you could do Fred's job one day. And Fred was the head of our retail bank. And I thought, gosh, that's a surprise. I'm an accountant. And then, what I was able to do was observe Fred and Fred's successor. So I didn't succeed Fred doing the job and thinking, I think I could do that.
Yeah, cool.
So when the role became available, I had a confidence that I probably wouldn't have if someone hadn't put that into my head, that I could do the role, because I'd sat there and thought, could I do that? Yeah, I can see what he's doing, and I can see that, we want to be able to put Kiwis into homes. And what I loved about the difference between those two roles, when you're a CFO, you have to influence the business. You have to influence them on, if you want them to cut costs, you have some power, but they've got the financial authority to spend the money.
Yeah.
So you're having to influence them about why this is a good idea, or influence the priorities of where we spend our money, for example. Whereas when you're in the business, the decisions you make impact our customers, and that was really cool. So I went from this influencing, dealing with external stakeholders and regulators perspective to a very customer-focused, decisions I made could impact the financial well-being of a New Zealander. Pretty cool.
Yeah, that's amazing.
And what I love about this job is it brings both together. You've got all the external stakeholders, you've got the wide view of the bank, and you've still got the customer focus that you have. We have 2.5 million customers, and being able to have an impact on their financial well-being is a real privilege.
Yeah, awesome. You were talking about your boss, kind of planting a seed in your head about doing a role that you hadn't thought about before. What role does your boss or does mentoring play in becoming a CEO?
Yeah, it's interesting because I actually, and I say this quite frequently, I think mentoring is very important, but personally I've never had, a formal mentors. I've never had someone like, oh, so-and-so, my mentor gave me this advice.
Yep.
I've had lots of great sponsors, so people who have taken an interest in my career. I've had lots of people who've given me amazing advice. I've had lots of great leaders that I've watched and learnt from, both the good and the bad. But I think the thing that mentors gives you is just a sounding board and someone, which is why I talk about sponsors a bit, because I also think sponsors are really important and probably a little bit underestimated.
Can you define sponsor?
So a sponsor is someone who doesn't just give you the advice, they actually take the active interest in your career and they think, I think that Antonia or Willie's doing a good job and I'm going to watch out for them and I'm going to listen out for opportunities and if the opportunity comes up, I'm going to say to that person, I recommend Willie for the role.
Yep.
And I think that's how I've felt that I've had, a number of the big moves in my career. I've had someone that's felt like my sponsor and felt like they've had my back getting me into the role. And also, part of that role is, and I think this would be both mentoring as well, is actually giving you, especially for women, I think, generalisation, but women will be more wary of the next big job. Oh, well, how could I do that? I don't know this, and I don't know this, and I don't know this, and I don't know this. A mentor or sponsor can sit you down and say, well, think about this. Who else might be in the group of people that might apply for this role? How do you think you would compare to them? And you suddenly look around and you go, well, actually, compared to that person, I think I could do the job just as well.
Cool.
And it gives you that sense of support and a way of thinking about it that isn't, oh, well, that's far too scary because that's the next big job. And I've certainly learnt over my career that as you go up the ladder, the new job isn't necessarily harder. They're just different.
Interesting.
Some of the hardest work I've done was sitting till 10 p.m. when our system shut down, posting journals as fast as you could to be able to close the books at month end. Whereas, what I do now, I actually have a decent amount of flexibility. Great. I do a lot of meetings, I do a lot of travel, I do a lot of outside work activity. So, like engagement, that sort of thing.
Yep.
So it's a different type of work-life balance that you're working for. So the biggest difference in this role, in some ways, is that if you make a mistake, it's very public. So if you make a mistake when you post the journal wrong at 10 p.m. because you're so tired, that's very different to something that happens, when you're more in the limelight, and that's something I've got used to.
You're seen more by everyone, aren't you?
Yeah, exactly, and I've got used to that. I guess I'd say I've grown a thick skin over the last 6 years, knowing that not everyone's going to ever disagree with me. There'll be people who are very critical, but I am who I am, and if I think that the decisions I made are with integrity and for the right reasons, and I can defend them, and I'm not defending the indefensible, then I'm comfortable in my own skin.
Yeah, that's great. That's great. It's looking around the world at the moment. Inspiring leadership is kind of difficult to see and find, especially in politics. But in terms of being the CEO, the leader of ANZ Bank, if I was to ask your colleagues what type of leader you are, well, what kind of words would they say?
I hope they would say approachable and relatable. And the reason I hope they'd say that is that in a bank, we're really complex organisations, and if someone doesn't feel like they can speak up and feel comfortable talking to leaders, then something an error that's happening could continue on, for example. So approachable and relatable. I think when I first became CFO, that was my first, I guess, higher profile role. Yeah. A number of people said to me, "Gosh, it's great to see someone like you getting a role like this." And I'm like, what do you mean, someone like me? And I think it meant, I think we've changed our views of leadership from being, being a directive, usually a man, usually a Pākehā man, and seen a much more variety of styles and demonstration that all different styles can work as leadership. You don't have to fit a particular box. And so I think that, at that time I was something that looked a bit different to what the previous mould had been. Because
what I'd seen in my kind of banking career is I'd only seen, from my knowledge, when I worked at ASB Bank for 10 years, and Barbara Chapman was the CEO at that time, and I think she was the only female CEO.
earlier on, but now,
I'd say she probably was. We had I'm the second female CEO of ANZ. We had Jenny Fagg back in 2010-11. She was quite a short tenure because unfortunately she became unwell. But that'd be right about Barbara. There'd definitely have been, at that time, there would be more bank CEOs called David than there were women.
Yes. But it's great to see that there's, I think, is there only one? So
three of the Australian-owned banks, women. Myself, Catherine McGrath at Westpac, and Victoria Short at ASB. Yes. Leanne Lazarus at Heartland Bank. Wow. Kerry Boyle at TSB. Yeah. There have been up to 7, I think. Wow. One of the Asian banks has had a female CEO. So it's changing, which I think is fantastic. Yeah. I got asked on I was talking to Jamie Mackay's show a few months ago, and a caller texted in and said, "What's this woke nonsense? All these women running these banks." And I'm like, there are 25 odd banks in New Zealand, and 5 are run by women. I don't think we've got any problem yet.
In terms of your decision making, you would have to make difficult decisions now and then, probably most of the time, because it kind of starts and ends with you. What's your process kind of to making those key decisions?
I guess listening and getting facts, but also not going into analysis paralysis, they say. You can keep getting facts and keep getting facts, and it doesn't make your decision any better. Probably one of the biggest decisions I've made as CEO is that we are replatforming our business. We've, like many large banks around the world, old banks, we've been around since 1840. Yeah. We're operating on some legacy technology. It's important for our customers and innovation to be able to modernise that. But equally, I could have kicked the can down the road. Plenty of CEOs will do that, and then someone will turn up and find a disaster. So, that was a tough decision because that's it's big and it's risky and all those sorts of things. But I still look at it and go, well, no regrets. Yes. Yeah.
Awesome. Is it the most difficult decision you've made as CEO? You had to make?
It's one of them. It was a big one. The decisions we made during COVID. The decisions we made about how we support customers when there's been something like Cyclone Gabrielle. There's one of the great things in COVID was we had the ability, we knew that our customers many of our customers just, didn't know where the next dollar was coming from because you didn't know what you were. There's so much uncertainty.
That's right.
If you had a business, you didn't know where your sales were going to come from. If you were an employee, you didn't know if your business was going to survive. We knew we had a lot of work to do. Yeah. And we knew we had a lot of work helping customers. And to be able to give our staff the certainty that you have a job was massive. And I just still remember staff contacting me saying, we've got so much uncertainty in our family at the moment. It's really good to be able to have that certainty and to be able to give that certainty at that point in time when no one knew where the world was going. I think we look back on it now and a lot of hindsight, but crazy. We had no idea. So we were able to invest our staff's time not in worrying about themselves but in supporting our customers, which was a really, really difficult time. Great. But the amazing thing is that the resilience customers have shown over the last few years has been quite extraordinary. Yeah.
And obviously, being CEO comes with a lot of pressure. How do you, I suppose, ensure that your mental kind of well-being is in a good place and clear to make those decisions? Yeah, what do you do?
Well, I think I said before the words comfortable in my own skin, and someone said that to me. They said, Antonia, you're, it was actually my previous boss, Sir John Key. He said, Antonia, he actually said, I've tried to intimidate you, but you're so comfortable in your own skin. And I think that's, if you make decisions from the right place, I think that's very helpful. And then understanding what someone once said to me, leadership is execution through others. So understanding it doesn't all have to land on you, that you've got a team of, I've got a team of the best people in the country, right? Yeah. If I don't, they can support me through all that sort of thing. And then I make sure I stay healthy. So
great.
I walk to work. I'm lucky that I live pretty near the city. I've been doing that for about 18 months since I moved to Grey Lynn. I walk to work, I go to the gym, I make sure I do the strength-bearing exercises that middle-aged women are meant to do, all that sort of stuff.
Yes.
Try and eat a reasonable diet, try not to eat the ultra-processed foods, all the things that they say. It doesn't mean that I don't, fall off that
Yeah.
every so often. And if someone offers me a sausage roll for breakfast, I'm all over it.
Yeah.
But or for morning tea. But so trying, because I'm not a natural sporty person. I didn't grow up playing sport. I wasn't good at it. I played netball for a while until I didn't get into this. We had 3 teams in the third form, and I didn't get into the C team. And that's when I started working in the shop on Saturday mornings, which is probably a way better thing for me in the long run. Learning all that and doing the banking and all those things that I absolutely loved. So doing that, the gym and exercise, it doesn't. I'm not one of the people that loves doing it, but you do it because if you don't do it, you don't have that. You don't clear your mind. You don't have the time thinking about something else.
Yeah. Oh, awesome. In Fresh Money, we kind of dive into people's personal finances, not the details of them, but in terms of how they manage their kind of finances. Do you have a budget? As a CEO, do you still have a budget?
No.
Nice.
I'm lucky enough not to need a budget. I'm spending conscious though. I'm not. I don't throw money around. We're not. For example, we're not car people. I don't really drive a car, but the car I'd say is mine is a Hyundai Kona. It's that's not where I spend my money.
Well, what are the things you'd like to spend money on?
Dining out. Eating, drinking, good wine. Cocktails seem to be very fashionable at the moment. We've got a lovely cocktail bar downstairs from us in our apartment, and experience. I think the way I'd put it is experiences, travel. I mean, I love travel. Obviously, I don't get as much time to do it as I'd like in this role, but one day the ability to travel. So I think probably putting it down to experiences rather than things. But that's partly because I'm lucky enough to have the things. I've got the warm home.
That's right.
I don't. I've got the things I need, and so I do have the ability to spend money on experiences, and I'm lucky.
Great. Are you an investor? Do you invest? Are you a property? Are you shares? A bit of
I'm
everything?
A very lazy investor. My mother's a very active investor, and I think she's horrified because it's far more managed funds. Not a property investor. We have an investment property, which was really one that came to us through family circumstances. And I just go, such pain. Like, why would you do this when you could put the money in the share market?
Exactly. Someone
else does all the work. It's far more liquid. You can take out little bits if you need it.
Right.
You look at the long-term returns, they're still very good. You can leverage property more easily. But I look at the place we've got and say, with or without leverage, it's still not washing its face, really. So,
It's funny, because putting money in it's kind of boring, just putting away. But I think the boring thing is it's people want flashy things nowadays, but it's like the boring, the consistent, say 3, like KiwiSaver, 4% that you're putting away. Actually, slow and steady wins the race in the end, doesn't it?
It does, and they say if you try and play the market, there's so much research that says if you try and play the market, you only need to miss out on the 5 best days in 5 years, and you've lost this much money. So put it in. Dollar cost averaging is something else my mother taught me.
Nice. Wow.
Yeah, I know.
Oh my goodness.
So
that's amazing.
So putting in a little bit each time. So some of your money you'll be putting in when the share price is high, but some you'll be putting in when it's low. And over time, it smooths out. And as long as you're a long-term investor, and that as you come to the time that you're spending your money, you go more conservative. And there's plenty of calculators and rules that can tell you about that. You'll be good. So we've got some money in sort of venture capital, stuff that's a little bit more risky.
Oh, nice.
Not much.
Yep.
And more, for me, that is, one of the things I hear when we hear about people who've been scammed is I've lost my life savings.
Yeah.
And one of those things is when I look at investments like that, it's we say that that's all gone. It's like there has to be money you can afford to lose.
Yep.
And you have to have that mindset towards it. You'll might get a big payoff. You might get a
you got to understand your risk profile.
Yeah, absolutely. And not putting all your eggs in one basket is really important, which is why a diversified fund, like a KiwiSaver fund or an unlocked fund, and I think as we get better financial literacy in New Zealand, as KiwiSaver develops, KiwiSaver is stuck till you're 65. And depending on what you want to use it for, there's plenty of things that the absolute equivalent of KiwiSaver, which is unlocked, depending when you think you might need the money. So I think there'll be more, hopefully over time, more investment into non-KiwiSaver funds as well.
Yep.
But equally, keeping going with the KiwiSaver, so important. You look at the demographics of New Zealand, and I think there's 4 working age Kiwis for every one retiree at the moment. There used to be 8, and we're going to 2, I think, in something like 2040 or 2050. There is no way in the world that the current, even with the super fund who do an amazing job of amazing custodianship of New Zealanders' money for the future, I don't see the sustainability of the way we do it at the moment, and so that's what makes people understanding that time value of money, the dollar cost averaging, the miracle of compound interest. That's why I think it's really important.
Yeah, awesome. Is there a money principle rule that you live by, or that you would pass on to someone?
I think it'd probably be those, the dollar cost averaging and the I just had a complete mental blank, and the miracle of compound interest. Those are the things. Save as much as you can, even if it's small. Even if you think, well, what's the point? I think when I was first had a job, so when I lived in the UK and Australia, there was super savings were there.
Yep.
But even when I was in New
time.
Zealand when it wasn't standard, and I was at KPMG, this is again Mum saying we should put a little bit of money away.
She sounds like a money guru.
It might have been, I don't know, $100 a month or $50 a month. I can't remember. It wasn't much. But by the time I left to go overseas, it was, or maybe by the time I'd been overseas for a while, it turned into $10,000, and that was only 3 years on. My starting salary was $22,000, so I wasn't saving much, and so you sort of get the sense of how it can build up.
Yeah. Do you think those your mum's kind of values is the knowledge about money, about compound interest? Do you think a lot of that has kind of, I don't know, phased out or kind of?
I don't know where it got. She was just interested. She's interested in investing.
Yeah, okay.
And that's why she thinks I'm a bit lazy. I think just putting stuff in managed funds. So she's always been really interested. But you'd open any money book, and it would tell you those things. And she opened them. Yeah. So she learned it, and she taught herself. Yeah. And so it's just how do we get people understanding those things? Like not. If you've got credit card debt, don't have money on term deposit, because it's never going to earn you as much as paying down your credit card debt. Right. All those sorts of little tips and tricks that, you sort of think are common sense, but they're not if you haven't grown up with it.
Yeah, because you don't know what you don't know. Yeah. Cool. Let's look at the economy. Yes. It's been on a bit of a roller coaster.
Sure has.
What do you see currently as kind of the kind of biggest risks and all opportunities for Kiwis?
I think some of the risk has come in uncertainty. Like everyone thought that the economy would be on the improve this year.
Yeah, by now, yeah.
And then what happened was the uncertainty of tariffs and geopolitical and all that sort of thing. So I think that's put a bit of damper on things. I think there are a lot of green shoots out there. There is the rural sector's doing incredibly well. Yeah. That's flowing through into the regional towns. I think if you go to parts of New Zealand outside, in particular Auckland and Wellington, you see more optimism. It'd be interesting what your thoughts are about Christchurch.
Christchurch is the best place to live in.
Well, that's what I've heard. And when we had someone coming in, I think it was, I was talking to someone, a staff member in Christchurch about a lending decision they were making about lending to, I think it was a hospo or something like that. And you're sitting in Auckland going, oh gosh, it's a pretty bad time for hospo. Yep. But they have all the facts and figures of showing that the hospo industry is booming in Christchurch. Wow. And
we've got a lot of infrastructure that has come in.
Yeah.
So obviously the stadium's on the way, the arts centre, we have a big sporting complex. I think it's around $1 billion worth of new kind of projects that are being completed.
And you also have really good housing supply. And, the post-earthquake investment and supply, I think, has meant your property prices, I understand, are a little calmer down there as well. Yep. So probably Auckland, Wellington are two areas where it's not so optimistic, but there are absolutely green shoots. And I'd like to think, so what we've seen is as interest rates have come down, people still haven't had the confidence to invest or spend. It's been more rebuilding the buffers. The reason people did very well over COVID is that they had good buffers. As interest rates came down, people kept their mortgage repayments for the same, for example. So they ended up becoming ahead on their mortgage payments, and so they had a bit of buffer for when interest rates went up. So now, at the moment, I think what people are doing are rebuilding their buffers.
Just a quick break here, whānau. Over the past 2 years running Fresh Moni, we've heard again and again that buying your first home can feel really tough. But we've helped so many Pasifika families get there, and if that's you, please get in touch. We'd love to help.
What determines how quickly you guys bring your rates down from an OCR? I know you put them in the fronters, bring them down kind of prior to them. You kind of build it in then, and then...
Yeah, it depends on if it's fixed or floating. So there's a lot of things that go into interest rates other than the OCR, but the OCR is more aligned to a floating rate, because a floating rate is the rate you can get in the market today, and so usually what you'll see is an immediate response to a OCR on floating home loans and deposits and business lending and all those sorts of things. With the fixed rates, what you're looking at is a forward look of the interest rate curve in the market. What do the markets think the curve is going to do in the future?
Gotcha.
So, the economists are all sitting around predicting, and all the traders are predicting what's going to happen to interest rates. The predicted reductions are priced into fixed lending, actually often a lot earlier, because they're priced off that forward curve, and everyone's expecting that in a year's time this is what interest rates will be, so this is the rate I can offer you for a 1 year fixed loan. And then we have to, what we do, just to get really technical, is we then hedge that back to floating. So banks run their balance sheet, we do some fixed lending and some fixed deposits, and we do some floating lending and some floating deposits, and some of them are natural hedges, and sometimes we need to go out to the market to make sure that we manage that interest rate risk as one bundle, all on a sort of a floating basis.
Yeah, I see. Yeah. Households are still finding it pretty difficult out there with, rates still increase. Insurances have kind of gone through the roof. Power is up. Yeah. What would you say to households out there and how they can kind of keep their heads above water at the moment?
I know that's a really tough one, and one of the things that gives people a lot of certainty and pride and gets you out of bed is having employment, and it's a tougher employment environment out there at the moment, and I really understand that. Even the usual hospo jobs that are available for uni students, part-time work, it's really tough to even get part-time work in that sense. So it's tough, having sustainable employment is important. So part of it is what can we all do to keep growing the economy so that there is more employment for everyone, and that we all participated in together. So I am definitely more of a I don't know what you call the economic theory. I'd probably say I'm centre right on economics. I'm pretty socially liberal. Yep. And I do think that growing the economy is the best solution for all Kiwis, and part of that is just hoping that these green shoots will come to bear, that businesses will start to invest more and have the confidence to invest, then they'll hire more staff, etc., etc.
Yeah. Awesome. I'm a mortgage advisor. Yep. And I think 55% of ANZ's home loans are written by advisors.
Something like that.
Yeah. Maybe 50.
Yeah.
Is that concerning for ANZ, or is ANZ happy to continue to use? I've got mates who are mortgage advisors as well. Is ANZ keen on using the advisor industry going forward? I
hope you feel like you're very valued to us, because you
absolutely.
are, as an industry, you're very valued to us. Of course, we like to be able to write mortgages through our proprietary channels as well, and we invest in our proprietary channels to make sure that happens. But the broker network is really important to us. And if you think about what's happened over the last 10, 15 years since the GFC, there's been more complexity has been introduced into lending. You've got LVR and loan-to-value ratio and debt-to-income restrictions for prudential reasons. You've got you've had significant changes in interest rates and sort of having the triple CFA, the Credit Contracts and Consumer Finance Act, has put some has at points in time, and it keeps getting adjusted, but set some quite strict regulations. So I'm never going to not respect someone's decision to want to actually sit in front of someone who can really help them navigate through that. Different banks have different appetites at different times. That if you fill up on your over 80% LVRs, correct, you might have some certain rules that you then go out to your advisors with. So having someone that can be, you feel like, and Kiwis are also, I think, quite happy to let someone else doing the shopping round for them sometimes. We don't see ourselves as great negotiators. Well, I certainly don't see myself as one. And so, that's why it's a really important network for us. We've got people who are experts who can help customers navigate that system.
Yeah, awesome. I definitely feel like ANZ are looking after advisors. I've got a great BDM, and shout out to Justin Cross, who looks after me and a lot of advisors around me really well. So thank you. Yeah. Turnaround times are great, by the way, as well.
Oh, fabulous to hear that.
Yeah, because obviously speed to yes is and client expectations is growing.
Yeah.
Managing that expectation is key, but also getting them a yes if it was always going to be a yes.
Yeah.
Not going through too many extra hoops. Has been great.
It's really interesting as we've navigated the competition inquiries. We had the Commerce Commission, then we had the Finance and Expenditure Select Committee. This idea that competition's all about price, and it's all about pricing to the bottom. Well, if this bank went there, why didn't you go lower? And it's like, well, at a point in time, we're giving money away. We have to pay for the money.
Yeah.
And at points in time in the cycle, time to yes, or can I borrow the money at all, or how much will you let me borrow, is actually where the competition is sitting.
It is.
It's not necessarily in the pure price. You might you might be prepared to spend 5 basis points more if you can. If with the bank that will let you borrow more, that can give you a yes, that gives you the certainty that I can go to this auction and bid on it. So I think that's one of the misapprehensions that people operate under about what competition looks like in banking.
The banking industry is changing. There's open banking that is almost here.
It's been here for a long time, but we're now getting regulated. It's now regulated.
Yes, I see. And AI on the...
Yes. On the horizon.
Everyone's talking about it for the last 12, 18 months.
Yep.
How is ANZ kind of preparing for open banking? Obviously, it sounds like you're already ready.
Yep.
What changes does that mean for your customers going forward?
Yep. So what open banking is allowing, it's using what's called API. So it allows people to connect to our bank more easily than they would have in the past with this sort of modern technology stack, I guess is the way of calling it. So we've been working on open banking as an industry for years now. But what we haven't been allowed to do is work together because of competition law. So every open banking partner that we work with on a bilateral basis. So we've got 11 partners live under the open banking, the official sort of, what would you call it, the framework that we've developed as an industry. There's lots of open banking that's been going on for years. Open banking is when when I give your transaction details to Xero, for example. That's a form of open banking, but it's more formally frameworked up, I guess you'd say, as an industry now. So payments went live for all the major banks last April, May, I think it was. We've now had 250,000 customers using open banking payments.
Wow.
Over about 1.2 million payments, I think it is. That has actually that is way bigger and faster uptake that we've had in the industry here than they had in, say, the UK, where they've got open banking for payments.
Yes.
So, people say, oh, New Zealand's so far behind. Well, I'd say in a way we're where the UK is in terms of the penetration. We've been able to look and do it better. So the next piece of open banking that, again, has been done because, we have bilateral arrangements with partners already, but it's being formalised and we're all committing to meet the same standards by the 1st of December, 30th of November or something like that, is data sharing.
Gotcha.
So that's when you say to me, I've got your banking details, I would like you to share them with this third party, and they'll be able to use it to help me with budgeting. They've got a great budgeting tool, and so they can take all my banking transactions and put in their tool and help with budgeting. They could help me with cash flow management. So it's those types of things. We can use open banking because we can take your transactions from other banks, add them to our transactions more easily. We've always been able to do it, but you'd have to get the bank statements and things. And more easily make the lending decision knowing what your transactional data looks like. So there's lots of good things about it. What's happening in December is it's regulated. You have to comply with the standards. That's for the biggest 4 banks, and then Kiwi Bank will be from middle of next year, and the other banks, I think it's more of
optional,
sort of more up to them.
Okay.
But if you're an open, but the other big thing is that there'll be an accreditation process. So rather than some of these fintechs have got great ideas, but they're having to deal with 4 different large banks who've all got their own contracts and all got their own standards, so they'll be accredited. The thing that we've been urging everyone to make sure happens is that accreditation is really strong, so that we are checking the third parties have the right security credentials, what happens if there's a data loss, all that sort of thing, because your very personal banking information is going to a third party. You want to know that it's going to be really safe.
Correct.
And the whole system will lose if there's any data breach early on. So really focusing on making sure that happens, but that makes it much easier if you're the fintech who's got a great idea and a great solution for some customers. You're not having to do this bilateral contracting with every bank. Yeah. So we've done that with 11 fintechs already bilaterally. We've got 13 in the pipeline, but this will make the whole process a lot easier.
Great. And I heard it was free as well. I think it was... Were you always going to be free?
Well, at the moment, we offer the first 12 months free. We hadn't really made a decision where to go from there. I would prefer it would have been left to competition to decide that.
Gotcha.
If your competitor's doing free, you might want to do free, and rather than being regulated that it must be free, because the real risk is that we end up with another FPOS. So FPOS, if you think, was world leading in the 80s. We were the first people in the world that were using our cards for everything. We were buying ice creams with them. We were using pins. When I went to the UK in '95, you had to sign for your Switch card. And I was like,
I did the same. I went to the UK and I was like, oh my gosh, I have to get money out from the cash machine to go and pay for stuff.
Absolutely. And then you go to the US and it's even worse, and you can understand that because it's so fragmented. So we had this amazing thing that didn't have a good commercial model. And so then things like PayWave and stuff came on, the scheme MasterCard and Visa, with a commercial model where they were getting some income from interchange, had the ability to then, both the banks and the card schemes were investing in that proposition. And we bought an Apple Pay that came at a cost, but that was worthwhile. And so that's the thing that worries me about having no ability to charge for that stuff, is that then where's the commercial imperative to keep investing? And it means the only investment, it's up to each individual bank, but the only guaranteed investment potentially is via regulation, not innovation. Do you know what I mean?
Yeah.
So
it's not led.
the jury's a bit out for me on that decision. I'd have preferred competition. I'm not saying I'm not making any commitments one way or the other about whether we would have charged or not.
Yep.
But I think that not having a commercial model helps with innovation over time and investment over time. I see.
Nice. In terms of AI, what are you guys doing for customers on the AI front, and how is it going to be safe? Little for customers at the moment. Okay. Although there's some really the biggest use cases at the moment for us are coding and technology. I see. The AI will write your first draft of your code. We would never let we're always then humans look at it. But if you're someone who can use their creativity with the code rather than having to do the first draft, it's sort of like if someone prepares you the first draft of a board paper, it's such a relief that you don't have to start from scratch. Yep. One of the other things is if you think about someone in our front line, they could have someone ringing them up at the contact centre saying, I want to send money overseas, or they could be saying, I'm ringing on behalf of my parent who's died, or they could be saying, how can you help me get a home? There's so many different things that might, and some of them are quite marginal. So we have this massive knowledge database that they have to sort of scroll through to find out how to do some of these edge cases. Well, the AI can actually help them look for that and serve it up really well, some of those. So it's another way of serving up knowledge. Writing first drafts of chats, those sorts of things. Yep. We haven't gone live with anything like that at this stage, but that's a good use case at the moment. We're still very much, we'd like the person to have a look at it first. There was the scandal in Australia recently where a report was written by one of the Big Four and it obviously wasn't reviewed by a person. That's not a good, using AI for productivity is great. We need to be more productive I think so.
As a country, but getting to use it safely. But the use cases that I've heard recently, it's just incredible. You put something in and ask the question, what are all the questions that could be asked? Look at the syllabus. What are all the exam questions I'd need to be able to answer? It's incredible.
Yeah. I think with technology advances, people are often afraid of is my job safe? I know in Australia there was some job cuts, but I don't think they were related to AI or anything like that.
They were reversed in the end, I think.
Yeah. Will that be on the cards? Could that be?
I suspect so over time, and that's something we have to manage really well as a society and as a business, is what are the future skills we're looking for? Because every time, if you think about it, every time there's been a real change, like Industrial Revolution, we had this sort of what they called the Luddites saying, well, we don't want machines making our stuff. Well, we can see the incredible advantages we've had for having machines making our stuff, and we've still had plenty of periods of full employment. So there's always an adaptation piece, and I think that's what we're trying to get to grips with at the moment. What does that adaptation look like? What are the future skills we need? Where are what are the? Because it's interesting. For a long time, sort of the humanities and have been less valued than business or accounting or science or STEM or all those sorts of things. But actually being a good AI prompter is going to be a skill set of the future, right?
True.
Actually asking a question really, really well, that's a different skill set than being able to...
Because it's the prompt that matters.
Then add up a ledger, the sort of thing that I learned.
Yeah.
And if you look at accounting even, the sorts of things I was doing as a junior accountant was having a 16-column cash book written out in hand, bagsing the add tape machine so that when you added it up, you could check your addition, but when it didn't add across or something like that. That's just no one does that now. Xero or you've got spreadsheets in the first place, but Xero does it for you or whatever. But there's still plenty of accountants graduating with work. Plenty of work to do, and the accountants I graduated with have gone on to do all sorts of different things. Yeah. So it's just a matter of understanding what that future's going to look like.
Yeah, awesome. Yeah. I've got a final couple of questions left. So you look after the Pacific, is that right, ANZ?
Yes.
So what kind of work are you doing to support the ANZ kind of branches there?
Yep. Yeah. So we've a number of things actually. We have just made a commitment with the Australian government. They provided certain guarantees for us, and we've made a commitment to retain our presence for 10 years.
Awesome.
And that's just some certainty, because there's always this, are the banks going to leave the Pacific? They're small markets, and it's hard to be a bank in a small market. So there's always been this uncertainty. So
because I'm guessing there wouldn't be too much profit or anything.
No. The way I think of the Pacific for us is it's really purposeful. It's a really important region to Australia and New Zealand, and especially New Zealand. I mean, there's as many Samoans in Auckland as there are in Samoa, right?
Exactly.
And, what we can do to help with the trade and capital flows, and with financial literacy. We have financial literacy programs across the Pacific. We've had, I think, 700,000 people have been through them over the years.
Amazing.
We have, in a couple of the countries, we provide financial literacy training to the seasonal workers before they come over here. We open bank accounts for them both in the Pacific and in New Zealand, so that they're not having to get the cash out at the end of the season and take it to, a money remitter. They can actually, we do fee-free remittances, and that's one of the commitments we made. We're already doing it, but we committed to retain that as part of this Australian government
because that's
deal.
A key part of culture.
Yeah, absolutely. I mean, the villages that absolutely rely on those remittances, and you see what the workers spend their money on New Zealand before they go. They're buying water filters and generators and these amazing, things that their village may not otherwise have. We've also done a program for. We've just done a pilot in Vanuatu, Solomon Islands, and Fiji for. It's called Saver Plus, and it's for market vendors, so they get financial wellbeing training. How do you say, put together a savings program, have more confidence with your money, and then whatever you've saved over 10 months, ANZ will match it to a certain amount. So I went to the graduation of one of them in Vanuatu a couple of weeks ago, and the sense of pride in people who hadn't really had a savings habit or thought about that
amazing.
Now felt like they understood, they had more confidence with their money, all those. It's back to what we talked about you don't know what you don't know,
Yeah.
and we've got to get the knowledge into people's hands.
That's so good.
Yeah.
So good. Yeah, I've seen a few photos of you going to Samoa, Fiji recently. If you ever need someone to show you around Samoa, I'm your guy.
I would love to get back to Samoa actually as a tourist.
Yeah.
Hire a car, look around the island a bit.
Yes.
But the welcome we had was incredible, and there's some really, really great businesses there.
Yeah,
our
cool.
customers that I went to see.
Yeah.
Yeah.
What's the focus for the next 12 months for you in ANZ?
It's probably a lot more. Hopefully, we will. If you think about what I've been focused on the last couple of years, there's been some real tactical stuff like frauds and scams, competition inquiries, customer stress.
Yeah.
And they've been. They all feel like we're getting into a better place. There's more and more protections that have been able to put in terms of frauds and scams. The competition inquiries are finished, and we've got some recommendations, and we're putting them in place. So it really feels like we've got the bit more bandwidth to think about the future and think about things like improving our technology, improving our customer experiences, growing our business, all those sorts of things. So it's a pretty exciting time actually. Yeah.
Awesome. This is my final question. I ask all my guests. What does wealth mean to you?
Wealth means an overall sense of happiness. I think you can't only talk about money, right? Money doesn't buy happiness. So being wealthy is more about having, the things in your life, friends, family. Someone. I can say I love going to dinner, but what if I don't have someone to go out to dinner with?
Yeah,
What's the point of that?
Exactly.
So I think that's how I define wealth.
Yeah, awesome.
Yeah.
That's beautiful.
Yeah.
Awesome. Well, Antonia, thank you so much for coming on the Fresh Moni podcast. It's been a pleasure to have you share your kind of wisdom and knowledge on money and finance, and especially your leadership as well.
Yeah,
So
it's been a pleasure to be here.
I wish you all the best for the rest of the year.
Thank you very much.